Hello everyone, July was an eventful month with hot inflation data, the Fed raising interest rate by another 75 basis points, and various mega cap companies reporting their earnings. And guess what? July still turned out to be the best month for stock investors since November 2020. In this video, I will share my view on the market for August, and as usual, I have added some technical analysis for some of the mega cap companies. Okay, a quick market recap. As mentioned earlier, the stock market had a solid rally in July, and this rally is likely fueled by better than expected financial results from some of America's biggest companies and the possibility of Fed going less aggressive in their interest rate hike to fight inflation. But as we entered the first week of August, the stock market has struggled to maintain its momentum as most stocks ended lower on Friday. This is likely due to the surprisingly strong jobs report. And yes, you didn't hear it wrongly, the market actually fell due to good news, as the good news has been treated like bad news. Alright, let me explain. US added 528,000 jobs in July, and this is more than twice as high as expected. The unemployment rate is at 3.5% and is at its lowest level since the 1960s, which growth also remains solid. And all this point towards one concern, and that is high inflation may persist, and as a result, the Fed would have to continue its aggressive interest rate hikes to cool the economy and curb inflation. So I think that's the reason why the market has fallen. Looking ahead for your information, August and September are historically the two worst months for the stock market. And oh, to add on, we are currently in a technical recession. Therefore, I would want to be more cautious if I am holding calls entering the new month. In fact, any investors who is thinking that the Fed is going to pivot and start cutting rates should stay vigilant. Come next week, especially Monday, we will have to see how the market continues to react to Friday's job report, as news typically takes about a day to digest. After Monday, the next big focus would be the report of CPI data, set to be released on Wednesday, 10 August. Economists generally are expecting the report to show inflation has peaked, which as of June hit 9.1% year over year, a 41-year high. The estimate and expectation for this Wednesday report is 8.8%. Personally, I feel this upcoming CPI report could set the tone for the Fed again. To share, the next FOMC meeting is in late September. So between now and then, the Fed will have two CPI reports and the August employment report to battle gauge if it should raise interest rates by another 75 basis points to fight inflation. Okay, before I move on to the technical analysis portion, I really hope you can help to smash the like button and subscribe to my channel if you have found some value in my video. Thank you. Okay, first up, I would like to start things off with VIX this week. Check out the yellow trend line that stretches from Jan 2022 to today, and VIX is currently sitting on it. In fact, it tried to go below it on Friday, but bounced back and closed right above the trend line. In case you are not aware, when VIX goes up, the stock market usually goes down. So looking at this chart, the upward trend line is still intact even after a strong rally in July. Therefore, I would think we are not out of the woods yet. Entering next week or even weeks ahead, keep a lookout for this trend line. It is currently serving as a strong support where VIX bounced up whenever it touched it. And interestingly, the last two times we kissed this trend line, it actually spiked up as you can see from the chart. In my view, VIX is likely a sleeping giant now waiting to be unleashed. But will it really happen or materialize in the coming weeks? We really wouldn't know, so I would think it's good to stay cautious. Moving on to SPY, I have mentioned on 19 July that bulls will try to bring SPY up to fill the two gaps that were created in June, and that once 400 resistance level is broken, we could fly up to 415. And guess what? SPY really went up to 415, briefly touched it and went down. So if you had followed my posts or videos, you would have caught some upside. Next, I have also posted on Momo several times that SPY has major resistance at 415, where the 61.8 Fibonacci retracement level is. To highlight, SPY attempted to break above 415 on a number of occasions in June and recently, but failed to do so. In my view, as long as SPY is below 415, I would think the market sentiment is still weak. In fact, I would give myself a little more buffer to 420. If it breaks above 415 and 420, then I will relook at the chart again to see if the stock market is ready to fly. Previously, I have also highlighted that bulls will attempt to fill the two gaps created in June, and usually, though not always, sellers will step in when these gaps are filled. For this case, it seems like sellers let it run to resistance level at 415 before stepping in. That being said, this doesn't mean that the market will fall next week. Market makers can move the market in either direction based on the CPI report. Nevertheless, on the downside, 400 should offer some form of psychological support. Further down, we have a gap between 379 to 380 waiting to be filled, followed by a support at around 370 where the next gap is. And if this breaks, I think the market would be very red. Moving on to Apple. Apple is on the hot streak as we had 5 straight green weeks. Not only that, it even went above the long-term upward trend line marked by the green line, which stretches all the way to October 2020. To be really frank with you guys, I didn't expect such a huge monster run from Apple. So what's next? The next thing we're gonna do is to see if this bullish run is sustainable. How so? Pay attention to the green trend line as well as the Fibonacci retracement level. Usually, the 61.8 level offers the strongest resistance, and currently Apple is sitting on top of it. So to confirm this bullish run, we need to see when Apple pulls back, will it bounce off the 61.8 level and green trend line and goes up, or will it break below them? In short, the key level to watch for the next 1 or 2 weeks would be 161. Switching over to the daily chart, if 161 doesn't hold, I would think there is a high possibility that we will hit towards the gap at 157 and 159. That is also where the 200 moving average is right now, at around 158. This area should offer some form of support, followed by 156. If it goes below 156, then we could turn bearish again. On the upside, if Apple bounces off 161 again, we could likely push towards the gap above it at around 173 before facing stronger resistance where investors start taking profits. Next, Tesla, arguably the most volatile stock right now. Looking at the chart, it seems like it's a battle zone at the 200 moving average, where it went up and down over the last 5 trading days. Anyway, the 200 moving average is currently sitting at 910, and that would be the first resistance for Tesla to break above before it can fly higher. I also wanted to highlight something. As we zoom out the chart, you will notice that since Tesla hit its all-time high in November 2021, it is in a downtrend marked by the red dotted line. What I'm trying to say here is that even if Tesla pushes to 1050 range, I wouldn't be too surprised, because with that, we are technically still in a downward trend. But before hitting 1k, the next immediate resistance I can see is around 977. On the downside, the gap between 751 to 764 is calling for Tesla to go down. It may sound crazy, but I think there is a chance for it to be filled, and that's more than 100 points down. Next, Microsoft. It has been range-bound for about 3 months, from early May to late July, and then it broke above the resistance at 270, which now acts as a support. I think the next movement will largely depend on the broader market. If CPI prints good number and broader market wants to go up, the bulls will likely push Microsoft up to fill the first gap between 292 to 295. To highlight, this is also where the current 200 moving average sits, at 294. There could be some form of resistance around this range, and perhaps give it a little more buffer, we could go near 300 before getting rejected. On the downside, as shared, 270 will now offer a form of support before it falls back to the consolidation zone between 240s to 260s range. But if the broader market tanks, then the recent low would likely be tested. Okay, here are my end thoughts. So far, the rebounds and rallies in 2022 have been short-lived, and 3 previous bounces in the S&P 500 have reversed course to make the new lows, and this has casted some doubts over whether the most recent rally will last. But to be honest, whether or not it's sustainable, it's very hard to tell. In fact, don't try too hard to predict. I think investors should stop having bias such as claiming the market will be bullish or bearish the next day or next week. Personally, I would think actual price action and trend matter more. This is because the market is by and large unpredictable. Case in point, the market actually rallied hard last month against the backdrop of a 41-year high inflation data, which has likely caught many investors off guard. And if you have been following my videos, you will know that I try not to come up with predictions or precise assumptions such as whether the market of a particular stock will be green or red at the end of a particular day or week. I prefer letting the charts and technicals tell me what's happening. And for the benefit of newer viewers or traders, here's how it works. If the stock is climbing up and looking bullish, look out for major resistance level. If it breaks the resistance levels, then yes, we will likely soar higher. And the opposite is true. When the stock is falling or declining and key support levels are breached, then yes, the downtrend could continue. And this is why I have the technical analysis segment in my weekly videos. So pay attention to those levels that I have identified. But of course, do note that nothing is guaranteed and that I am a newbie. Therefore, please also do your own research, stay nimble, and know how to cut losses when necessary. With that, I hope you have learned something, and that's all for this video. If you have found some value in my content, I really hope you can hit the like and subscribe buttons. They mean a lot to me and will keep me going. Thank you very much.